Hi friends, I'm back with one more interesting video. Today's topic is on how to increase the range of this triangle. Okay, so I've deployed a triangle, right? This is one of these triangles. So I'll just show you like how to increase the range of this triangle starting from the deployment till the expiry. Okay, I've taken this expiry 17th is my start date and the end date is on 24th. So this is a weekly triangle. Okay, I've deployed this triangle. You know, right? The adjustment of this triangle is we have to manage the premiums. We have to manage the premiums. So if either side of the premium is disbalanced, right? So we need to just balance the premium. So that is one of the adjustments of the triangle. Either you can go for balancing the premium or else you can just go balancing the delta. So though it is showing -4, it is like as good as the delta neutral. All right, so but for this video I'll show you like how to balance the trade using the premiums. Okay, so now we are at 10:20. I've deployed a triangle at 10:20. Okay, I'm just moving to next day. Okay, looking at the graph, the next day at 10:20 the market stays in the middle, so we do not need any adjustment because even the premiums are more or less balanced, right? There is not huge difference between the put and the call premiums. Okay, so let me take you to the next day. Okay, yeah, if you look at the graph, though we are in profit, but looking at the graph, this is like imbalanced. Looking at the graph itself, we can say, sorry guys, there is some issue with my mouse. Okay, yeah, looking at the graph, if you look at the current market, we are safe on the call side, but we are not safe on the put side, because if you look at the blue line, it's very steep on the put side. And even if you look at the premiums, there is huge difference between put premium and call premium, because the market was coming down. All right, so there is an increase in the premium in the put side, but wherein in the call side the premium has decreased. So there are like basically two adjustments. Like majority of the traders, what they do is like they actually what they do, they exit this trade, right? They exit the call by booking this profit, and then they will sell one more call close to this put premium. Okay, before that friends, let me tell you, before doing the adjustments, this was the original range. Okay, I'm just making a note, this was the original range, so wherein we are getting almost close to 1020, right? On the day of deploying the triangle, we got the range of almost 1020, right? 500 points on the downside safety and 500 points on the top side, on the upside. So I'll just make a note, and the maximum profit was, okay, this is very important. Okay, this was the original trade. So I'm just going to show you like two different adjustments. Okay, majority of the traders, what they do is like they square off this leg. Okay, what they do is like, because they square off the winning leg. Okay, so now the call stands at the premium stands at 20, so I'll just try to book at 20.35, right? Okay, I'm just booking this call, and then now I will sell a new call close to the latest premium of the put side. So I have to sell a call worth 104, around 104. Okay, I'll go to the option chain. Yeah, this is the close. I'll just sell this call to get it back to this triangle. So now again we stand here, right? This is my triangle. Right now the market is in the middle, so we have like equal safety on the call side, we have equal safety on the put side. All right, so this is basically one of the adjustments which majority of the traders will do. So just keep a note on this break even. Okay, I'll just copy the entire thing, right? This is one of the differentiator, friend. Okay, and I'll make a note of profit the moment we have done the first adjustment. Okay, this is what we see. Okay, right? If you look at the original range, right, compared to this range, the moment we have done the adjustments by squaring off the call and then selling a new call close to the premium of put. Okay, look at the break even, right? So don't you think the break even, not break even, the range, don't you think the range has decreased? Basically, though we see the profit has increased from 9,000 to 13,000, but don't you think we are compromising on the range, because the strength of triangle is the range actually. So as and when we do the adjustments, we start decreasing the range by increasing the profit. So I would say that is not a best practice, because during this volatile market, the kind of market we have, right, even if 300 points of gap down or gap up, you will end up into huge losses, and naked strangles are, right, you have unlimited loss, right? Many of the traders, I mean, they do the proper adjustments, but traders who doesn't have much experience, they end up into huge losses if the market opens a gap down of, let's say, if there is a gap down of 2.5%, you'll end up into huge losses. If there is a gap up of 2.5%, you'll end up into huge losses. And nowadays, right, gap ups and gap downs have become like very common due to the volatile market. Okay, so this is one of the adjustments. So okay, we have a good profit, but we are compromising on the range, right? You can just calculate the range over here. This is the original range. The After doing one adjustments, this is the adjusted range. Obviously this has decreased, because from 7, though we are safe on the put side, but just check the upper side, 17,470, right? But earlier we had like 738. All right, see the range actually. Okay, so now I'll show you the other adjustments. I'll just get back to the original trade. Okay, I'll just delete this leg. Okay, this was my original trade. So the other kind of adjustments, what I'll be doing is like, just go to the profit and loss. We have to do the other way, right? We have to do the other way, rather than squaring off the profitable leg. We have to square off the put, right? Let's say I'm just squaring off at 104. All right, I've just squared off this put leg for 104. So now I have to sell one put close to the premium of call to make it back a strangle. Okay, so I have to sell one more put close to this 20.35 premium. Where is 20.35 premium? Okay, okay, so I'll sell this put. Okay, so when I sell this put, I'll come back to my payoff. Okay, I'll just copy this entire thing. This is my new break evens. Okay, for the second adjustment, what we have done, and go for, I'll also take a check on the profit. Okay, so this is where the differentiator, right? So in case if someone wants to give more importance for this profit by reducing the range, they can go for this adjustment. But if someone is like very conservative, for them even 5,224 is a huge profit, considering they're getting some extra range. I mean, do you see, friends, here? Do you see the range over here? Right, so let me take the calculator. Okay, initially the original range was, I'll show you everything. The original range was minus, okay, so we had the original range of 1026. So when we did the first adjustment, let's see what is the range we got. Okay, the range has reduced to 840. So initially it was like 1020 for this thing. Now the range has reduced to 840. Okay, so let's see what range we have by doing the other way adjustments. Okay, the second adjustment what we have done. Now we have a range of 1300, more than the original range. So just by sacrificing 50% of the profit, right, we have increased the range to 1300. So looking at the graph, don't you think this is like more safe, right, in terms of safety on both the sides, right? So the market stands in the middle, so we have huge protection on the put side, we have the huge protection on the call side. We have another 3 days to go for because we are on the 22nd, so right, 23rd, we have 3 more days for the expiry. So don't you think this range would help you, right, to sustain in the market, right? This can easily absorb the gap ups, right, and also the gap downs. So friends, I'll just leave it to you, right? If people who are like very aggressive, if they are like particular about this profit, if they wanted to take the risk, they can go for this adjustment, meaning just you have to just exit the winning side, right, and just take one more call close to this premium, right? But for people who are like very conservative, they wanted to be like very safe in the market, like by protecting both their downside and upside, so they can just do the other way, book the loss making PE, right, and then sell a new PE matching to the premium of the call, right? So then you will get almost 1300. It's almost like 650 points on the downside and 650 points on the upside. So that is your call, right? If, because you know, right, preserving capital is very important rather than looking for the profit. Even this profit on a capital, I think this would give you huge return. So I'll just leave it to you. So I wanted to show you like how exactly we can increase the range of this triangle by doing the adjustments. So there are like many various adjustments. I was able to do these adjustments on 22nd, that was almost on the 17th, that was almost on the third day, right? So just in case if you come across any such situation the next day, so rather than booking the winning side, just try to book the loss side, and then sell in such a way that you increase your range on either side, on your testing side as well as on your opposite side. Because the beauty and the strength and the core of Strangle is range, right? Why people go for Strangle? Because they get huge range, bigger range compared to Straddle will give you like little range, right? The beauty of Strangle is it gives you more range than the Straddle, right? So if you are able to increase the range, right, by sacrificing some part of the profit, right, by sacrificing some part of the profit, I think out of 10 trades, even if you win like 7 to 8 trades in this triangle, you will end up making too good money, rather than reducing the reducing the range and getting up getting I mean just getting into the loss making trades. All right friends, so this is all about this video. This is a very short video. So this is just how to increase the range of this triangle by doing a unique adjustments. Okay, if you're not able to understand, please uh, you can watch this video one more time. All right, thank you friends, thank you for watching.